Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective to try to understand where we have the highest probabilities of the next potential move. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video to the end, and I will see you on the charts. In today's video, I want to speak about EURGBP because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can notice is that the market is testing a very strong level of monthly demand and support. From here, all this move to the upside was created. Again, here, the market tested its zone and rejected it to the upside. And again, here we can notice how the market tested its zone multiple times and rejected it to the upside every time. And in this current month that we're currently trading in, we can see how the market tested its zone, started rejecting it to the upside. And in this situation, we could expect more bullish continuation as we have seen in the previous cases. Dropping down on the weekly, what do we have? From a weekly perspective, we can notice how the market just tested the previous low and rejected it to the upside. In fact, the movement of the market was this impulse correction. The market tried to continue lower, failed, printed a double bottom, and at the moment is rejecting it to the upside. So also here on the weekly, everything seems pretty bullish, especially if we will have a weekly close above this box, because this is the previous weekly support, which was broke to the downside here, turned resistance, retested, broke to the downside, and at the moment the market is trying once again to break above it. Now, if we will have a successful weekly close above the zone, at that point, that previous resistance would once again be turned support here, and we could expect a retest and then continuation higher. If we drop down on the daily time frame, what do we see? From a daily perspective, we can see how the market just printed this overextended W formation. Now, in general, after the creation of an overextended W, what you would like to see is first a correction to the 0.32 of the Fibonacci taken on the daily impulse, and then a potential continuation higher. So in this situation, what we could expect is first a potential completion to this 0.32 Fibonacci at this level, and then a continuation higher for the completion of the impulse correction and impulse pattern to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the euro, we can see how with the last reports, net positions have been decreasing. We went from minus 34k to now minus 44k net positions, with shorts getting increased more than the longs that are getting increased. Now, usually when you see both shorts increase and long increase, but shorts more than longs, what usually is then created, if that is happening during a move to the upside, is a rejection to the downside, where then more longs get added. And from here, long positions should start to outperform short positions and getting added more than shorts. And at that point, net positions should once again start to increase. And at that point, the market could provide a continuation to the upside for the completion of an impulse correction and impulse pattern to the upside. So in this case, what there is the possibility is first for a potential short-term shorting opportunity, and then a longer-term longing opportunity. But approaching these setups one at a time, how we could be approaching this potential short-term shorting opportunity back to the 0.32 of the Fibonacci taken on the daily impulse. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4-hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to potentially shift from an intraday bullish market as we have right now to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point, we could be looking for a potential rejection to the downside for the market to retrace at least to 0.32 of the Fibonacci taken on this daily impulse. Now, if you don't know what I'm speaking about when I say valid entries and those kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you will have the possibility to gain access to my entire course with also the rules of the strategies, and also have the possibility to access one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that at the moment I'm running a special promotion in which you have both a big discount on the upfront price of the mentorship program, but since I have partnered with the Forex broker Blueberry Markets, if you open an account with them through the link on your student dashboard after you join, you have the possibility to get a full refund credited back inside of your trading account. And if you scroll down, you will see that you have the possibility here to join and gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm, and I will see you in my next video.